Rick Santelli standing by at the CME in Chicago with some breaking. I hope it's not too broken. Rick, the numbers, please.
Yes. Well, look at stocks. They're giving you the clue. Pre-opening equities are flying. Interest rates are moving lower, but not directly affected by this number. Housing starts for December, just a whisker under 1.5 million, 1,499,000. And what's unique about this, even with last month's revision, 1,289,000 moving up to 1,294,000, these are all seasonally adjusted annualized units, is that we've gone from the weakest level last month to June of 2020 last month, even with the revision, to today's number, which is the best since February of 24. So a real switch. And much of the weakness, as Diane Olick has been pointing out, was in multifamily. But don't count out multifamily. What's the news this week? Even though interest rates have gone down, and we will see mortgage rates catch up to that, previous to that, if you looked at the Mortgage Bankers survey this week, 30-year top 7%. Well, with high interest rates in housing, and even with this move in treasuries, they'll probably remain high, it's going to keep multifamilies in a positive light because, you know, it's more affordable. Now, on the permit side, this is a December preliminary number. It will change. 1,483,000. It's been hovering right under 1.5 million permits, seem much less affected by some of the recent dynamics on the start side. If we look at interest rates, here's something interesting. A 422 2-year is only down 1 on the session, down 16 on the week. If you look at a 457 10-year, it's down 4 on the session, down 19 basis points on the week. A 30-year at 480, down 6 on the session, down 15 basis points on the week. These are large moves. A 10-year from an intraday perspective, Joe, is at the lowest yield right now since the 3rd of January. 2-year note yields, of course, are making new passes at low yields for all of 2025, which I understand isn't that old, really. And maybe the other thing that you want to pay attention to, momentum building. This is the 4th consecutive session, a 10-year and 30-year trading below the previous day's low yields. That's important. Now, I wouldn't try to necessarily tie all this to great news on inflation. I think it's more about positioning. And why do I bring that up? Because long-end rates went wild. Now they're going wild a bit in the other direction. But it doesn't mean the Fed's going to go wild easing because of the move we've seen post-PPI and post-CPI. Back to you.